what's good, everybody? Happy Thursday. Man, the week is going by quick. It is going by quick. Speaking of Thursday, today, if you're available, actually tonight, if you're one of our customers, you want to see the new announcement of our new funds, check the events calendar on our website. We have two new funds we're going to be announcing tonight. The aggressive stock fund for those of you that want to beat the market's performance, and a dividend focused fund because a lot of you have the dividend approach. Now look, here's the deal. We have lots of portfolios here. Currently, as of like a minute ago, we only offer 4 of them. We're going to be posting all of them here on the website so you can see. We'll give you guys a sneak peek tonight at the class, if you can make it, of what the website's going to look like as far as all the performance and everything. But we have 4 portfolios that are public. We have lots of them that we manage that are not public, that we use for certain clients. And now that I can publish this stuff, that I can put it out there to the public, and I've sort of cleared all the regulatory hurdles, we're going to be introducing them one by one. We've got target date funds, you name it, man, just all kinds of cool things we're going to be including into the mix here. So we're going to start tonight by showing our clients 2 of the new funds. That'll be at 7:30 tonight Eastern time. If you can't make it for clients of ours, no worries. We will be sending you the video replay, and I'm going to try to keep the class really short so you don't have to sit down and watch like a 40-minute video on the 2 funds. We'll try to keep it real short. Got some slides saved up for you so you can kind of see what the performance is, how it all works, and see if it's something you're interested in. We'll walk you through that. Also tomorrow at 1 o'clock, our normal daily video that we do on YouTube. It's just going to be live this time. I'm going to introduce the website that shows all the performance. So those of you that watch us and you're like, I don't know if Jaswell has what I want, has what I need, you'll be able to now see it on our website legally without us breaking any rules. And what you'll be able to do is kind of see the performance, see what the goals of each of these portfolios are. If it fits something that you're doing or want to do, then at least you'll kind of know that. You'll be able to make a better decision about using us here at Jazz Wealth. I'm losing sleep. I mean, I can't even tell you how excited I am about this. So we'll start tonight. And also look at the events calendar on the website to see if there's other events that you may want to be a part of, whether you're a client or not. Okay, let's dive into the markets here today, because another good day, right? The markets actually started off good today. Tech, healthcare was pretty good to get things started. Banks helped out a little bit, nothing crazy. Before the markets opened today, you had the Labor Department come out and say that their price data, which we use for inflation, was a lot softer than we had expected. Now, what does that mean? Does that mean anything to you guys? By the way, any questions that you post live, I definitely get to at the end once the delay kicks out and gets closer. There's a delay, so if I answer it now, it's always behind, but I'll get to it. Don't worry. The inflation data that came out today was softer than expected. What it means basically is that some people now will think the Fed will slow their rate hike progress and they won't do it as aggressively. What you should know is that in June, if anyone wants to bet you that the Fed will not raise rates in June, you take the other side of that bet, no problem, because 100% of every analyst, every bond trader, every single person on Wall Street, 100% of them believe the rate hike will happen in June. And so for that reason, the Fed will do it just because they know we're all expecting it. It won't hurt the market, so don't worry about that. So that data today, what it really did was help the 10-year note fall back under the 3% rate. Manny, thank you so much, sir, man. I'm going to point that comment out because it is fresh, isn't it? Woo! One of our clients is a barber here in town. If you ever need a haircut and you're in town, I cannot tell you how good this guy is, but he's one of our customers. I'm happy to recommend him to anybody. Thank you, sir. Sorry, got off track there. I just felt good about the haircut, man. So Fed rate hike, right? June meeting is going to happen, no problem. The 10-year note, let's go to that actually, show you that on the chart, because the 10-year note actually came off of that 3%. There we go. And so when prices rise on bonds, that's when the yield pulls back. So I think we closed right around 2.97%. If I missed it, but it's around 2.97. The Labor Department also announced the jobless claims. The weekly jobless claims came in at record lows again. I believe a 4-year low is where we're at on those jobless claims. So looking pretty good there. My chair has adjusted, so let's do that. Wasn't all good news though. If we'll look at a couple things. We'll look at the markets first. Here's the S&P 500 on the chart, continuing to break out of that range. If you're a short-term trader, that's awesome. You love this sort of thing. If you're a long-term investor, like most of our customers, it's just good news, right? We're not going to take any action based on this. We're just going to enjoy it, right? It's a good moment in the market where everybody's happy. We're going to accept it and just know that we're in the right position and we're taking advantage of it. Here's the Dow on the screen doing the very same thing, just a touch behind the rest of the markets. And the Nasdaq currently is one of your leaders. There's the Nasdaq just blasting off there, mostly because of tech. If you're an Apple fan, you had Apple prices soaring even higher today, just completely disregarding any resistance at all. Facebook was up 1.5%, has a little bit of work to do, but the important part, the headline here, is that Facebook actually recovered all of that Cambridge Analytica nonsense back here. So they are back to positive post the breach there, that data breach that they had. I believe Amazon finished up. It was bouncing back and forth on the day. Yeah, added a few ticks there. And that's pretty much it there. Alphabet was also up, I think 1.5%. Yep. In the news, you got Tesla. There was another crash. There was one here in Florida. It's not the automated pilot thing. It was 2 teenagers actually were killed in the crash here, but it wasn't because they had it on autopilot and something went wrong, at least as of now. It seems that they just slammed into a wall while the battery exploded. And the question now is going to be the safety of that battery. So they just can't catch a break there. I mean, it's a sad story, but look, every time a car crashes or a Ford crashes, do we make a big deal out of it? If a Toyota Prius crashes, you know, and it catches on fire, it's like, I feel like we're just picking on Tesla a lot. I'm not a fan of Tesla from the automaker standpoint, but I mean, I don't think we need to pick on them. So I wish the best for that investigation. It's a sad story. I saw it on the local news here as well, but I just don't think you can go blaming this car company for everything. So I better stop talking about that one. Limited Brands, also some bad news here. Limited Brands, these are the guys that do Victoria's Secret and Pink. They warned Wall Street today, things are not looking good. We are not selling those cute little pairs of underwear. And because of that, the stock broke down to new lows, lost 7.15% on the day. That means it's down almost 50% on the year, just for 2018. And I don't know about you, but like it's May, right? So we're not even halfway through yet. 50%, that is not good. They have earnings coming out on the 23rd of May, so not too far away. And lastly, I'm going to pick on these guys again because this is starting to get ridiculous. Wells Fargo back in the news again, not for anything good. They actually admitted to this. They were keeping fee rebates that they should have passed on to the Tennessee Public Pension Fund when they were acting as their trustee. A good example would be if I were somehow getting paid for every one of my customers a rebate. Let's say Folio, the brokerage firm that we use, let's say for some reason they gave me money for using them. They do not. I wish they would, but they do not. And I didn't disclose that to you. Let's say that they gave me $1 for every customer that came in or something. And you know that dollar is supposed to go to you. Turns out I just kept the dollar the whole time. That's essentially what Wells Fargo did. They admitted to it. They owe $47,000 to the Tennessee Public Pension Fund, which we know from my pension videos desperately, desperately needs every last penny. Wells Fargo said, look, it's a system error. We're really sorry. We didn't mean to do that. It was a system error on our part. And I don't disagree with that. It probably was a system error, but come on, guys. This just shows like how bad they really are at managing this company. So, I don't like to dog on people. I wish them the best, but that is not good timing for another error on Wells Fargo's part. And they're doing everything they can to change their image, but the image is not looking good. Okay, in earnings here, after the close, if you're interested, Dropbox is reporting earnings for the first time since being a public company. They reported earnings. The stock is already down 2%. I'm not even sure. They must have reported. Yep, they did report already. No, that's not the symbol. Dropbox. It's down 2% after earnings. Not horrible. I was kind of thinking maybe it'd be a little bit worse. And Elon Musk lastly says, hey, the rockets that we're building, they'll be able to be reused at least 10 times. So if you're into that whole rocket stuff, which I am, I think that's the cooler part of their business there. Pretty cool. You're able to use those big rockets 10 times. Anyways, I'm going to wrap it up there because we got our class tonight. I want to make sure you guys get the most out of that as possible. I want to finish up all of the material. B. Thomas says, will you be posting the performance videos to YouTube? Tomorrow, I'm going to show you on the website. I'm going to go over all of that live at 1 o'clock Eastern time. That will be on YouTube. And if you don't make it, that's fine. It'll be on YouTube just like this video is right now. That will be on there, and I'll show you more importantly where you can go and find it and spend more time kind of looking through that data to see if it's something you like. Yeah, I did see Wells Fargo's attempts there. I don't like to say too many negative things. I'm really frustrated with Wells Fargo, Fidelity, and Prudential at the moment. I haven't done that video yet. It's amazing what they're getting away with, and I don't want to like present it and make it seem like, oh, you're just trying to get people to use you here. Well, you know, yeah, that's the goal, but you know, I want them to do right. I want people to have faith in the financial system because that reflects on me too. So I'm trying not to pick on them too much, but Wells Fargo just cannot give us anything good to go on, and that is really, really sad. Gonna wrap it up here, guys. Appreciate it. We'll see you tonight if you're gonna make it there. Otherwise, we'll see you live tomorrow at 1 o'clock. All right. Thanks, guys. We'll talk to you soon.